I'm sure you've heard the news. America's debt numbers are off the charts in 2024. The average American's debt has skyrocketed, hitting an all-time high. You won't believe how much it's climbed. Stay tuned for the full breakdown. Please remember to like, subscribe, and comment for more Money Smart Basics videos. Stay until the end to receive a bonus tip. If you have any suggestions for financial literacy topics for our next video, please leave a comment. Debt. It's like that thing you get when you buy stuff. Alright folks, let's talk debt. That magical word that strikes fear into the hearts of many, yet somehow we all seem to have it. You want that sweet new gadget, that shiny car, or maybe even a place to call your own. Sometimes you gotta borrow to get there. But here's the catch. Debt's a bit like that friend who's always down to party, but then expects you to foot the bill every single time. It's easy to get caught up in the excitement of buying things, especially when credit is readily available. It's like being handed a bottomless bag of money, except it's not bottomless. It has a very real bottom, and once you hit it, things can get messy. We're talking late fees, interest rates that could make your head spin, and let's not forget the stress-induced ice cream binges. Understanding how much debt we have, both individually and as a nation, is crucial. It's like taking a good hard look in the financial mirror. Sure, it might not always be pretty, but it's the first step towards making smarter choices. So, instead of playing financial hide and seek, let's face this thing head on. Now, you might be wondering, just how much debt are we talking about here? Well, buckle up, Buttercup, because the 2024 numbers are in. And they're not exactly a walk in the park. According to those lovely folks over at Business Insider, American household debt is officially on the rise. We're talking record-breaking numbers here, people. And no, unfortunately, this is not a record we want to be breaking. Knowing the enemy is the first step to defeating it, right? We'll dive into the nitty-gritty details in a bit, but for now, just know that the average American household is carrying a hefty load. Think of it like this. Imagine you're carrying a backpack. Every time you swipe that credit card or take out a loan, it's like adding another textbook to that backpack. At first, it might not seem like a big deal, but eventually, that backpack is going to start weighing you down. It can affect everything from your mental health to your future goals and aspirations. We're about to embark on a journey into the wild world of American debt. We'll be dissecting the different types of debt: credit cards, mortgages, student loans, and those ever-present auto loans. Think of it like a financial safari, except instead of lions and tigers and bears, we've got interest rates, late fees, and maybe even a debt collector or two lurking in the shadows. We'll explore the ins and outs of each debt category, giving you the lowdown on how they work, how they can impact your life, and most importantly, how to avoid becoming a statistic. Knowledge is power, after all, and understanding your finances is the first step towards taking control of your money and your life. So, grab your metaphorical safari hats, folks, and get ready for an eye-opening adventure into the heart of American debt. Okay, remember those Business Insider folks we mentioned? The ones with their fingers on the pulse of the American wallet? Well, they've been crunching numbers, and let me tell you, it's not a pretty picture. The average American household owes more money than ever before. We're talking record highs. It's like everyone decided to throw a giant debt party, and now we're all stuck with the hangover. The biggest culprit, the one hogging all the snacks at this debt party, is good old-fashioned consumer debt. This includes everything from credit cards to personal loans, all that fun stuff we use to buy things we probably don't need. And guess what? This consumer debt is skyrocketing. It's like we're collectively trying to outspend each other on the latest gadgets and gizmos. But here's the thing. All that spending comes at a price, and right now, it seems like a lot of us are paying for it with debt. Section 2. Why is this happening? Seriously, someone explain it. Now you might be wondering, why the heck is debt on the rise? Did everyone suddenly develop an aversion to saving money? Well, it's a bit more complicated than that. First off, let's talk inflation. You know, that thing that makes everything more expensive? Yeah, that's been a real buzzkill lately. When prices go up but our paychecks don't necessarily follow suit, it's like trying to outrun a cheetah on a treadmill. You're working hard but going nowhere fast. So, what do people do when they're struggling to make ends meet? They turn to credit cards and loans to bridge the gap. It's like using a Band-Aid to fix a broken leg. It might provide temporary relief, but it's not a sustainable solution. Stagnant wages are also playing a starring role. For years, wages have remained relatively flat for many Americans, while the cost of living continues to climb. Section 3. It's not all doom and gloom. Okay, I know what you're thinking. This is starting to sound like a financial apocalypse. Should I start building a bunker in my backyard? Hold your horses, Chicken Little. It's not all doom and gloom, at least not yet. While it's true that debt levels are concerning, it's important to remember that not all debt is created equal. There's good debt and bad debt, and understanding the difference is crucial. Good debt, like a mortgage that helps you build equity in a home or a student loan that invests in your education, can actually be beneficial in the long run. These types of debt typically come with lower interest rates and can help you build wealth over time. Bad debt, on the other hand, is the kind that keeps you trapped in a cycle of borrowing and repayment. This includes high-interest credit card debt, payday loans, and those too-good-to-be-true financing deals that make your head spin. Understanding the difference between good debt and bad debt is essential for making informed financial decisions and avoiding those debt-induced nightmares. Section 1. Credit card debt, the sneaky serpent in your wallet. Alright folks, let's talk credit cards. Those little plastic rectangles that promise the world but can leave you drowning in a sea of debt faster than you can say cashback rewards. They're like that friend who's always down for an impromptu shopping spree but then conveniently forgets their wallet when the bill arrives. Here's the deal. Credit cards are easy to use, maybe too easy. Swipe here, tap there, and bam! You've just bought yourself a whole bunch of stuff you didn't even know you needed. It's like magic, except the magician in this case is a giant corporation that makes money off your spending habits. And speaking of money, let's talk about interest rates. Those sneaky little percentages that can quickly turn a small purchase into a mountain of debt. Credit card interest rates are notoriously high, which means that if you're not careful, that cute pair of shoes you just had to have could end up costing you double or even triple the original price. Now let's move on to the big kahuna of debt mortgages. These bad boys are the loans that make homeownership a reality for millions of Americans. But let's be real, taking out a mortgage is like signing a pact with the financial gods. You're basically agreeing to be in debt for the next 15 to 30 years of your life. But hey, at least you get a place to call your own, right? And it's not all bad news. Mortgages typically come with lower interest rates than other types of debt, and you can actually build equity in your home over time. Think of it like a forced savings plan, except instead of putting money in a bank account, you're putting it towards owning a piece of the American dream. Student loans, the gift that keeps on giving, or should we say, taking. These loans are often seen as a necessary evil, the price you pay for the privilege of a college education. But with rising tuition costs and stagnant wages, student loan debt has reached crisis levels in America. It's like we're telling young people, hey, go to college, get a good education, but oh, by the way, you'll be paying for it for the rest of your life. Not exactly the most inspiring message, is it? And here's the kicker: student loan debt can have a ripple effect on your entire life. It can impact your ability to buy a home, start a family, or even save for retirement. Last but not least, let's talk about auto loans. Those tempting financing deals that promise to put you behind the wheel of a shiny new car, even if your credit score looks like it's been through the ringer. But here's the thing about cars. They're depreciating assets. That means they lose value the second you drive them off the lot. So you're essentially taking out a loan for something that's constantly losing value. And let's not forget about those monthly car payments, insurance costs, gas prices that seem to fluctuate with the tides, and of course those unexpected repair bills that can drain your bank account faster than you can say transmission replacement. Okay, so we've talked numbers, we've looked at terrifying graphs, but what does all this debt actually mean for regular folks like you and me? Imagine this. It's payday. You're excited, right? Direct deposit hits and it feels good for about 5 minutes. Then, it's bill paying time. Rent or mortgage? Gone. A huge chunk of your paycheck vanished into thin air. Car payment? There goes another chunk. And we haven't even gotten to groceries, gas, or those surprise medical bills that seem to pop up more often than squirrels in your backyard. Suddenly that once promising paycheck is looking thinner than a supermodel on a juice cleanse. This, my friends, is the debt squeeze in action. You're working hard, bringing home the bacon, or tofu, we don't judge, but it feels like you're barely scraping by. It's like being on a never-ending financial treadmill. Here's a little secret. Those seemingly perfect families with their fancy cars, designer clothes, and exotic vacations, they might be knee-deep in debt too. It's easy to get caught up in the comparison game, scrolling through social media and feeling like you're the only one struggling to keep your head above water. But the truth is, a lot of people are living beyond their means, putting on a brave face while secretly drowning in debt. It's like a game of financial poker and everyone's bluffing. We're all so busy trying to keep up with the Joneses that we forget to ask ourselves one crucial question: are the Joneses even doing okay? Spoiler alert, they probably aren't. In fact, they might be one unexpected expense away from a full-blown financial meltdown. The point is, don't let the highlight reels of other people's lives fool you. Section 3, Dreams Deferred, the high cost of carrying debt. Remember all those dreams you had? You know, the ones about starting your own business, buying a house, traveling the world? Well, when you're drowning in debt, those dreams can start to feel about as attainable as a unicorn riding a roller coaster on the moon. Here's the thing about debt. It's not just about numbers on a page. It has a very real and very insidious way of chipping away at your hopes and aspirations. When you're constantly worried about making ends meet, it's hard to find the energy or the resources to pursue your passions. That dream vacation you've been saving for? Suddenly, it seems more responsible to use that money to pay down your credit card debt. Debt has a way of shrinking your world, limiting your options, and making you feel like you're stuck in a rut. But it doesn't have to be this way. There is hope, and there are ways to break free from the shackles of debt and start living the life you deserve. Section 4, Financial Stress. More than just numbers on a page. Let's talk about the elephant in the room: financial stress. That constant, nagging worry about money that can keep you up at night and leave you feeling like you're one unexpected expense away from a full-blown meltdown. It's more than just a minor inconvenience. It can have a serious impact on your mental and physical health. We're talking headaches, stomach aches, insomnia, anxiety, depression, the whole shebang. When you're constantly stressed about money, it's like your body is stuck in fight or flight mode, pumping out stress hormones like it's going out of style. And let's be real, no one performs their best when they're running on fumes and adrenaline. Financial stress can also put a strain on your relationships. Arguments about money are a leading cause of divorce, and let's be honest, no one wants to be around someone who's constantly fretting about finances. It's like being stuck in a room with a mosquito that just won't quit. Eventually, you just want to scream. The point is, financial stress is a real thing, and it's not something to be taken lightly. If you're feeling overwhelmed by debt and the stress is starting to take a toll on your health and well-being, it's crucial to reach out for help. There are resources available, and you don't have to go through this alone. Section 1, Taking Back Control. You got this. All right, folks, we've covered a lot of ground here. We've talked debt, we've looked at scary statistics, and we've explored the very real impact that financial stress can have on our lives. But here's the good news: it's not hopeless. You don't have to resign yourself to a life of debt and financial despair. Remember that feeling of empowerment you get when you finally conquer a tough level in a video game? Or that sense of accomplishment after a killer workout? Taking control of your finances can feel just as good, if not better. First things first, create a budget. I know it sounds about as exciting as watching paint dry, but trust me on this one. A budget is basically a roadmap for your money, showing you where it's going and how you can make it work harder for you. There are tons of apps and online tools that can help you create a budget in minutes. No more excuses. Next up, tackle those debts head on. Start by making more than the minimum payment on your credit cards. Look into debt consolidation or balance transfer options to snag lower interest rates. And hey, if you're really feeling motivated, try the snowball method. Pay off your smallest debts first to gain momentum, then roll those payments into your larger debts. Boom! Section 2, The Future of Finance, It's Brighter Than You Think. Remember how we talked about those sneaky credit card companies and their high interest rates? Well, guess what? There's a whole new wave of financial technology companies out there that are shaking things up. We're talking apps that help you automate your savings, robo-advisors that provide affordable investment advice, and even peer-to-peer lending platforms that cut out the big banks and their hefty fees. It's like having a personal finance guru in your pocket. But here's the best part. It's never too late to start. Whether you're just starting out in your financial journey or you're looking to get back on track after a few financial faux pas, there are resources available to help you succeed. Read books, listen to podcasts, talk to a financial advisor. Knowledge is power, and the more you know about managing your money, the better equipped you'll be to make smart financial decisions. And hey, if you can laugh at yourself along the way, even better. After all, life's too short to be stressed about money all the time. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here's the bonus tip that we promise. If you're buried in debt, it's time to dig your way out. Here's a tip: focus on paying off the smallest debt first. It's called the snowball method. Knocking out small debts gives you quick wins and keeps you motivated. Challenge yourself to start today. If you have any suggestions for financial literacy topics for our next video, please leave a comment. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like, subscribe, and comment for more Money Smart Basics videos.